Alright, so we're gonna do a little weekly recap because I was trading this week. But so what we're gonna do, we're gonna go over trades I missed or just didn't do, and trades I did, all of them, and explain them thoroughly. So we're gonna go back real quick off the week, the market open right here. So boom, market opens, perfect, but market opens, comes down to the 3200 area, right? Instantly bounces off of it. And previously, we're already bullish, right? We see price rally up 1, 2, 3 days in a row. So, of course, we're going to anticipate a drawback, and we see price come back here. You scale down even more. Moving averages are still crossed over, so I wouldn't enter here because there's just not enough confluences to enter. But I'd wait for a higher low. So we see price come up here and start coming back. So I'd place a Fibonacci here, right? Fibonacci here. And we already see this area where price stopped at a bunch. So this would be our first CP. Look at the 27. So we see price come back here. And so we're going on the 15-minute for all of this, right? 15-minute for all of this. And see price come down 50 level, instantly overtake this candlestick completely and push up, come back down, higher low here, and continue to push up. So I would enter somewhere here because there's not really a good way to get an entry all the way down here because it just really isn't. And I have my stop loss like right there, or even lower, but that would lessen the risk reward. So I just bring it as low as I can to keep a 1 to 3 and have my TP at the negative 27, and matter of fact, and probably just continue move our stop loss below the higher low, right? Below the higher low. Could move it to the negative 61.8 and even risk more on this trade because you could be more confident you have true confluences with the higher low. Moving average crossover on the 15-minute. And overall, just very bullish momentum that we know we're seeing, right? You could take it as far as to go even higher. I'm not sure if I would though. Just be confident in these two. But if I see price pushing up strongly like this, even strongly through this area, you could just move your TP higher and remove a lot of risk on that trade. So you could move it to 3,300 or 3,275, somewhere here. And yeah, you can have confidence price would push up. There's not really an entry you could look for here. All price is pushing up. Really just gotta watch it move. So it would suck seeing all it move like this, but if you were active, you could just move your TP higher, preferably 3,300. Right. There's no real Fibonacci you could place to know, so it would just all be just being in that trade and just playing it out. But likely getting out at the negative 61.8 right there. You already won 2 trades, and waiting to sell price gives you another confluence. Could extend this right here. The 3300 area, and when price gets there, actually, you can see an entry here, but I'm not sure if you want to enter for like 500 pips right here. You could enter like here, I guess. Stop loss here, but as you can see, it'd be a 1 to 2. I'm not sure if you could get a better entry here. This isn't really part of the plan because you're not seeing a clear breakthrough, retest, or push through without it being like um you know too risky. So it's not really aligning with the plan. So all right, so yeah, not really the best place to enter. You'd want to enter where we would see the highest probability setup, which would be at the next key area, which is 33,500. Yeah, the 33,500 area. So we see price get here. I don't know why I did that. See price get here on the 1 hour. Once it gets here, instantly drops. We see a morning star, no, evening star, right, being formed here. We go on the 15-minute. We see a lower high, break of structure here. And as it's pushing down, could enter somewhere in this candlestick. Stop loss really above the key area because we're confident. We could be confident it wouldn't come back to that key area. And this is a trade I would enter despite it not being a 1 to 3. And then when price comes back up here, we see the moving average already crossed over and everything. Price comes back here, goes back into profit. You could enter for another trade, even though it didn't break the lower low. Could just enter right here. And boom. So those are two trades that could have happened. Actually, I'll keep the trades on now. I'll delete them. So another one. Put this back to. Okay. That was GA. We'll take a look at that later. So somewhere here, boom, boom, just here. And our stop loss is in here. TP that. Got another one. There, boom, and right there. Alright, so we're gonna be a few trades would be in or the few trades we would have took. Yeah. So we see price get to the 3,300 or so and go down to the 15-minute again. Once it gets there, creates a higher low, pushes up significantly, and we would enter here because price could do this, boom, continue to drop. So we wait, moving average crossover right here, higher low, boom, could enter here, should enter here. Realistically, you want to get this entry here, but at the same time, you're not going to really know if it's going to push up or not. But having that tight risk to reward right here would also be good too. Let me scale out a little bit. You could place a Fibonacci. Pretty far range Fibonacci here. All right. So yeah, Fibonacci there. Could enter there, but at the same time, that is kind of trading against the trend. So I would want to enter here. Stop loss right there. A tight risk reward as well. 1 TP here. Another trade right here I'd probably place. And TP probably at this area. Considering the Fibonacci. Extension to the negative 27. Knowing me, I'd probably sell here too. I'd probably enter for a sell here. A stop loss right here. Entering here. Despite I know it's an uptrend, I would enter here because I would probably enter for a sell, just not knowing whether or not. Or I'd have a pending trade here. But I would probably enter here and get stopped out. But that's just me being honest, transparent. But I know that I probably would enter there, despite me knowing that it's an uptrend. But that's a pass. Now, I would likely not enter that. I'm sticking to the trend, as you can see, with the trades I would take in the future. I'll show you. As price gets here, breakthrough, retest. Let's go back to the 1 hour of the area, right? But not really a higher time frame setup. So we could just wait for it to get to the next area. You could also do what we did last time, extend this one, take a lot of profit off of it, extend this one, move your stop loss to like into the next structure point, like right here above this higher low, and just have your trade moving. Right, it's literally just money. It's free money. At this point in this trade, you can move it to up here so you don't lose anything, and just let price rock out. And as you see, soon crushes both TPs. So, yeah. Once you see price gets here, we're already knowing. As we're trading this, price is at a all-time high, right? We go on the daily, we're knowing price is at an all-time high. We're expecting a crash soon, right? So I would be pretty hesitant. That's why I would just let it keep moving and move my stop loss to where my TP would have been. But as we get here, the first sign of weakness we see, we're taking advantage of that and we're entering because we know price is at a high level. If it shows any weakness, it's likely to be the push down that it's going to do. So you see price get up here, starts to move down. We're not going to enter here. It could just be a retracement at the 34.50, right? It could just be that. Let's place this right here. So here we'd be waiting for I'd be waiting for a breakthrough and a retest just to be completely confident. But I would also probably enter here. We see the moving average crossover, retest of the moving average, push down, retest, push down. Enter off somewhere in here. Stop loss would be above this retest. TP, first TP would be down here. Go back to the 1 hour. First TP would be down there. Especially since we know we're crashing, I'd move my TP even lower as well. So I'd have 2 TPs, one here. Oh. One here and one here. just because I'd be confident that we're pushing lower and lower. Of course, this is hindsight bias. I will not lie. This is hindsight bias. This is the best probability trades, right? Also, if I'm being completely honest, up here, we see this push up. I probably wouldn't enter here, right? I probably wouldn't enter here. We also see the inability to break through the 3,500 area, right? I was even looking at this. We tapped it, started pushing down, retest, moving average crossover, push down, retest, moving average, slap down, retest, moving average, slap down. Enter there. Do you not see the confluences? See one confluence right here. This is our first confluence. We see the push down. Second confluence, moving average crossover. Third confluence, retest and push down to the moving average. Fourth confluence, overall all-time highs, right? Push down all the way. We see price continue down, but we're not going to really enter here because how can you enter here, right? So see price push up. Let's go back to the 1 hour because we're not going to 15-minute analyze. Let's also put some confluences here. Confluences here were boom. See this higher low. Moving average crossover. And we could even take away the moving average. Just look at pure structure. Come down, push up, push down, 50 level, higher low, tweezer bottom as well. Push up, you're just enter there. Right? So yeah. Put them back. So I'm also gonna go over something else I've been noticing. Something I'd never really truly paid attention to, but now I'm going to start paying close attention to them because it really changes trading. It changes the whole outlook of trading if you start looking at this. But I'll go into that in a second. We see price come down, come up, tap the moving average again. This isn't really a place we'll be looking to enter, but we also see, look at this mid-level right here, 37.50. Even move it farther. Oh my gosh. Let's even move it farther. 37.50 right here. 37.50. Yeah. No, 375. I don't know why I was saying that. Anyways. Rectangle. Boom. Where did price stop in the past? When it was rallying up, stopped here, retest, push up. Price came down, came here, retest. So what can we expect? We can expect price to push down. As we see this retest, we don't really know if it's gonna keep pushing down or not, is what I would say. But we already see this huge rally down. And where has price broken that downtrend structure? It hasn't. It's simply creating a lower high. That's all it's doing. You can also see, I'm not sure if this will work. It probably will. Yeah. Fibonacci right here. Right. Okay, this is getting confusing. Hold on. Let's start Fibonacci right here. Let's remember. Retest. Narrowly taps the 38.2 Fibonacci. Once it gets there, we see this push down, I'm instantly entering. Once I see this right here, this strong push down, I'm going to enter here. Stop loss right above that, really tight stop loss. And TP, again, where my old other TP was, the 3,300, and have my first TP there. Not the greatest of risk to rewards, but right? We're confident in this trade. We could be confident in it. We see price instantly going into profit. Comes up to retest the 500? Yeah, 3350 area. Once we see that, push down, could enter right here. Really tight stop loss right here. Stop loss right there. All right. Stop loss right there. TP, same area. Boom. But, bro, okay. To help more with this, the risk reward here, you could also enter again right here. How do I stop that? I think that should have stopped it. Could also enter right there. And move the TP down to the negative 27 extension. This week was really heavily focused on Fibonacci's, right? Move it down to the negative 27. Once we see price get there, what do we see? And this wouldn't be there. This would have been there initially. So see price get there. See price create higher lows, right? And I'm pretty sure this is where I started trading. What was this? 23rd. Hold on, let me take a look. No, I started trading 25th, so no, not the 25th. Okay, it was the 24th I started trading, so it was this day. Alright, so once we see price get here, wouldn't really be entering anything. Price is low-key still pushing down, but once we see this push up, we can't really get an entry here. We're waiting for it to get to the key area, which would be 33.25, the mid-level, or just the 33.50, which it does get to. We see price push down off of it, come up, retrace, right? And I would enter here. I'm gonna be honest, I would enter here. Fibonacci right here, and I would have just lost this trade. 15-minute moving average right here. Boom. Stop loss right there. TP. Wow, where is it? Negative 27. That's this, right? Oh, it does not. Oh, how did that happen? That's confusing. Oh, okay, it was here. Alright, I would probably just have it to the negative 61.8, which is where again? Okay, it's right there. Or to match the low, either here or right here. But this would be the highest risk reward, so I'd have it here. In profit, instantly stopped out basically after a few hours. So we see price come back up. Come up here. Is unable to reach the mid-level 33.75. Again, what does it do? Come down, lower, smaller candlesticks, lower high here, push down, moving average crossover right here, enter right there. Stop loss could be up here, but TP would probably be, we'd have to move past this area, so I'd have it at the previous low. I'm pretty sure this is a trade I entered. Let me see. Three, three, one, three. Oh no, I entered here. I entered here. Um. Oh wow. Okay, I see it. I see it. I see it. I see why I entered here. So as we know, price is overall still bullish, right? We're still bullish. As we see this price come up, come down. What is this right here? This is simply a Fibonacci. Interesting, I didn't see this the second time around. You see a Fibonacci right here, right? Let's delete this other one right here. Fibonacci, come up, come down, starts pushing up a little bit. And we also do see a breaker structure here. Yeah, we see a breaker structure here. This was the previous lower high. Price breaks this, push up, push down, could enter here, would enter here realistically. TP would be at, let's close this trade too. TP would be at the next level right here. We'd get stopped out. I would enter again. I'm pretty sure that is what I did. I got stopped out. Enter again right here. Moving average slowly crosses over again. Right here. And oh, let's go down. So I entered right here. I got the best entry possible, right? The best entry possible. What I was doing, I entered here and had my stop loss down here and had my TP match this high. That's what I did. Entered here. I also had a pending trade down here, but it didn't reach this area. So I had it. I entered here, 1-3 around here. I was very confident price was pushing up. You see this Fibonacci? I moved my stop loss below the next Fibonacci ranging area, not ranging area, the next Fibonacci level, which was 61.8. Had it there, TP up here, very good trade, very good trade. Yeah, price gets here, comes down. We already went over this. Let's see if I entered that though. I entered here. Once I saw this breaker structure, I entered here. Oh, wait. Oh, okay. I was looking at the wrong thing. Oh, I was looking at the wrong thing the whole time. What the heck? Wait, no, I wasn't. So I entered 32. I entered here. My TP was at down here. Pretty sure this is a trade I got into. Yeah, this is a trade I entered. Price comes down, lower high, comes down. You see a higher low, but price creates a lower high again, lower high, pushes down, continues. And I even sold even lower. One of the trades I entered had a TP all the way down here. Let me see. Here. But as we know, as price got here, right? Still had this running, but I saw price get here, right? And once I saw price get here, I was like, yo, I see this higher low. Now I see a match of this area. Um, Inability to break of it, because if price wanted to break through, it would have kept going. It did not keep going. It closed 50% of this candlestick essentially. Stopped all bearish movement. I exited both trades, scaled down to the 15-minute, and I'll show you the exact trade I entered. So I entered for a buy. Right here, stop loss 6.4. Right here, right at that place for, and this was a real trade I entered. TP at the 33.50, but for some reason my funded account, I purchased like all the add-ons, but the weekend holding glitched up, I guess, glitched or something, and it stopped me out. But this trade would have been like a 2% gain. It was already a 1% gain at this mark. So these are the trades, wins and losses. So many opportunities for wins, so many opportunities. So I'm gonna show you a little something. I'm gonna close these indicators. Go here and look at sessions. I want to go deep into the sessions of this pair. So let's start all the way back here. One thing I noticed about this pair is its tendency to reverse and continue during certain sessions. For example, during Asian and London, I noticed Asian and London tend to move in the same trend, but during New York is when it will tend to reverse, right? Yeah, that's when it will tend to reverse. So we see price Asian and London We see price. New York. No. Let's start here. Asian push down, push down. New York reaches this area at New York session, reverses. Asian and London continue up. Asian continues up. London continues down a little bit, creates that retracement we're looking for, but it stays within this range. New York reverses exactly what London and Asian did, essentially. All they did was provide a retracement. New York pushed all the way up. Asian and London. Um, there are times where they will continue up. If you see no confluences for it to reverse during a New York, then it likely will just continue, right? If you see no confluences, then don't just consider it to just randomly continue or reverse. Asian, London, they get here. Asian gets at this area, starts to reverse. London continues it, and we see price get to the 3,300 during New York. What do we see? Price continues up. It reverses, right? This trade could have been avoided if I would have knew that during that time London or New York is when it would normally reverse. So I could have entered here and see price continues. Asian continues what New York started. London does as well. See how they're continuing in the same trend essentially. Let me go here to the trend line for all of these, so you could see Asian, London, New York, Asian, London, New York, both down, up. So you see there will be times they're all up, or there will be times where one's up, down, up, but those are the retracement eras. We see Asian down, down, up, down, down, up, and stagnant. New York was stagnant here, provided a way for entry, but Asian shoots up, but it comes down at the end. London continues it. New York continues it. See, there'll be times where they all continue. If you don't see a confluence for it to reverse, then it likely will not reverse, right? It's as simple as that. Asian down, London down, New York. See, this is where New York reversed. At this area where it was not support before, it just stopped here. We don't know why, we don't know how, but it just stopped there. We keep that in mind. It stopped there during New York. Price pushes up, right? Asian, it gets to the 33.50. During Asian, comes down. London, it comes down, giving way for a reversal. We see this Fibonacci. New York pushes up. Entered here during New York, pushes up. Price gets to the same area. Asian starts reversing. London reverses. New York gets to the same exact area. New York reverses. It's clockwork, right? The market does the same things, same patterns. If New York session got to some random area, right? Random area. Why would you expect it to reverse? It did here, but yeah, it did here. You would have just had to cut that up as a loss. If you would have entered here, okay, I see no reason for price to reverse. Okay. Actually, you do see a reason for price to reverse. Right here. This candlestick right here is giving no decisiveness, I'll say. It's a doji. Push down, pushed up, push up, push down. It's not giving you really anything. This, however, this gave you a lot, right? This gave you a lot. So you see this at the start of New York. You could infer it's not gonna continue all the way. It's not gonna continue down, right? When we see that it happen over here, London, You see how it came down at the end of London, start of New York. This huge wick right here, huge wick. That's a good, great confluence to enter on, right? So that's gonna step my game up with. Oh no, step my game up with gold trading tremendously, knowing that Asian and London tend to move in um in opposition to New York session. And sometimes Asian and London and New York will co-align, but during most times, unless there is a reason for price to retrace, unless price is at a key area, um, a break at a breakthrough and retest of a counter trend line, breakthrough and retest of a key area, candlestick pattern, strong candlestick pattern. By the way, here we see this. It wasn't at the start of it. I won't count that. Here, tweezer bottom. That tweezer bottom there. Candlestick pattern. Break of structure. Where's the break of structure? Let's see. Break of man. Yeah, we don't really see a break of structure during New York. So the break of structures usually happen during Asian London. We see a break of structure here. London Asian session. Break of structure here with the lower high London session. Break of structure here Asian session. So we need to be aware of that. Moving average crossover. Moving average crossovers typically happen. Let's see. Oh, okay. Let's put this one. Let's bring this back. Moving average oh, I need to save that. Trend lines. Save as default. Yeah. So moving average crossovers typically happen during, let's see, Asian. This won't happen during London or New York. So they'll happen whenever it happens. But that's just another confluence on top of everything. Small candlesticks at a key area. We see that. Asian right here. Asian session right here. Asian session right here. It just drops off of it. London and Asian. This is hard to read. So Fibonacci retracement tool. Failure to break previously booked area or key area right here in New York to clear advantage of that. So it's just important to know what session you're trading and know what's going to happen at said session, right? So what's typically the most typical thing to happen at that session? Asian and London typically move at the same trajectory. If you see Asian pushing down, what can you expect overnight? You could expect it to continue pushing down, right? You could expect a little fluctuation, a lower high at the end of Asian, start of London, and then a push down. But during New York, you're ready for go mode. You're either saying, okay, is it at an area where it will reverse or will it continue? If it's at an area where it will reverse, you have more confluence for it to reverse. If it's at an area where it will continue, you will be wary of the reversal. But you could see that, okay, either price is going to reverse or it's going to just be stagnant. It'll be stagnant or continue up. Those are the things you're looking for: stagnancy or continuing up. That was a lot. So these are the trades we would have seen for gold last week. I will remove all drawings and put everything. Actually, I'll keep it. Wow. Let's see where we're at now. Okay. What's that? Okay. 45 minutes. All right. Now we are on to GA. Luckily for you guys, I don't have a lot for GA because GA was not the biggest mover this week. But I did manage to get a few trades off with GA. So I'll show you that. I'm just gonna use this to mark the end of last week so I know where to start. All right. All right. So we know where to start. So yeah. Okay. So yeah. Let's see. Let's scale down a little bit so we could get it. Sunday. No, okay, we want to move it here. All right, so this was a start. Basically, all we saw last week, last week, was consolidation. There was no way for true entries, except the fact if you scale out to the weekly, what do we see? We see overall bullish movement. All right, we go on the daily time frame. We go back in time here. Pretty sure it was here. I'm not sure. I think it was here. I cut through something. I'm not sure where it was. It had to have been here. Or it's here. I'm not too sure. But price created the third bounce here. So let's go to this. Yeah. See this overall bullish sentiment. So we're confident price is gonna push up. So imagine price is back here. I was not trading at all here. At all. Whoa. Okay, the week started here. Oh yeah, that's where the week started. Did I go too far back on this one? I went too far back. No. The week started up here. So no one was gonna tell me, huh? Nice. Yeah, the week started the 20th and went to the 27th. I went through like 25th. I went through a lot. I went through 2 weeks basically. Yeah, because Friday was Good Friday, so there wasn't any trading. No, that was last Friday. Yeah, it was Good Friday. So, okay, this removes a lot of the time that will take. So, C price coming up. We don't care about this. So, I'm sorry if it's laggy. By the way, I'm not sure if it's laggy. It might be laggy. If it is, I apologize tremendously. So, we have this trend line. Once we see price get down here, I went back in time and I put this trend line. All right, so I'm waiting for price to, get back here. So once price, I entered somewhere here. Hold on. Let me go back. Entered the 24th at some time. Yeah, I entered for a buy here. See. Yeah, I entered for a buy here. Got stopped out though. So we see this trend line, double top here. Could have entered here. Just somewhere here. Stop loss right there. You could go down to 15 minute as well. Moving average crossover right there. Stop loss right there. TP would be right back at this area. Low risk to reward, but not the shabbiest of trades considering the market conditions. And I ended up entering in a sell here. Ooh, hold on. I need to find it because I remember the sell. It was a good sell. I just forgot where. $7.5, yeah. 2.0805. Right here I entered. Stop loss. 8. TP was all the way down here. This was a trade I entered. Yeah, this was one of the trades I entered. But other than that, I did also have a sell going on here. Once I saw price get here, let's see where it was. Sell right here. Yep. 6, 4. Somewhere here. Stop loss was here. I think. Nope. Stop loss was all the way up here. Good stop loss. Great stop loss. And TP was down here. Oh, it matched this, I think. Yeah, it was matching this. But I did get FOMO and exited this trade. So I tried to enter for a buy here somewhere. Because I'm pretty sure gold was pushing up, and I don't know. I have this weird with correlating currencies where I think it'll both move in the same direction. So I lost this out of this trade. We see the move average crossover, clear bearish sentiment. But let's also go back to the sessions. Okay. Let's go back to the sessions part. All right. Let's analyze. Asian in London. Yeah, we see with New York is, with GA, it's really the same thing. We see London, Asian and London typically move in the same fashion, and New York would be a reversal. Asian pushing up a little bit, so Asian will be where the entry really shows itself, right? Entry shows itself here. Boom. But not really a good one. I don't know where you would enter during consolidation. Asian shows a entry here. You see the entries, but they're not smart entries. But London is where it fulfills it, and New York is typically where it retraces back. So Asian comes down. You see a lower high here, entry, but you wouldn't really enter there. There's no real way to know where it would stop or anything. And Asian continues it, New York reverses it. Asian gives a good, solid entry here. Comes down. London somewhat continues it, creates a lower high, and New York, as we know, unless there is a reason for it to reverse, it will typically just continue. We see price up here reversed it because it was at a resistance area, which we didn't see, but now we do now. And this was because of the trendline tap. Price didn't have anything here. It was just in the middle of nowhere, so it just continued down. Asian, we saw an entry set up right here. Boom, but during Asian, it's still reversed. So Asian reversed itself here. The trendline tap, push all the way up. So I realistically should have had a pending trade here, waiting for price to tap this trendline again and pushing up. Hold on. That sounds a little too familiar. I think I did that. When was this trade? Hold on, did I show you guys this trade? I did. I showed you guys that was a trade I took. Okay. It has to be here. No way I didn't take that. Okay, so apparently I didn't take this trade here. It sounds like I did though. I don't know. I'm pretty sure I was thinking about it, but I guess it was during late Asian, so it was 12 a.m. I was sleeping. Pushes up. Asian London continues it. So at the end of London, Asian, it still showed its true colors, showed where it was truly going, pushing up. London continued it, and what did New York do? Start of London, mix of London, New York, it started reversing, and New York showed a lower high here and then continuation down. So we could see how um these sessions play such a vital role in our pairs. And if you're not paying attention to your sessions, I highly, highly, highly recommend you do, because it is very, very, very useful. No matter what session you're trading, you don't have to dedicate your life to that session, but you should be very aware of what session you're trading, what time it starts, when they overlap, and how it affects your pair. If you're aware of that, and you combine that with your trading, I was told that. I heard YouTube videos telling me to do that. I did not listen because I didn't really think it was that important. But now that I'm seeing the importance and the true integrity of it, I'm gonna start doing it like strongly and start sticking to it. Discipline as well. I'm not risking too much. My wins are 1%, 1.5%. My losses are what, 0.3, 0.4. Let's see. 0.5, 0.2, small losses, big gains. Um, and again, only one trade truly played out. Oh, not again. First time I'm saying this, but only one trade truly played out in all of my trading, which was the 1.3%, which was this trade right here. This was the only trade that truly played out. The other ones had to get cut short. This one got cut short. This one never happened. This one got cut short because my broker, I don't know why. But great trades overall. Great trading week. We're looking forward to the next week. We're gonna incorporate all of this. Um, and we're gonna also go over a weekly recap of the trades we could have entered. But hopefully we could see price somehow break out of this range for GA. I'll probably do a analysis of the week ahead for these pairs, but for now we're done. I'm leave this up, I guess. Leave this up as well, and I'll clean it up. Thank you guys for watching if you did, and I was basically at 1 hour of golden footage.